Good morning, it's Jonathan Barrett with the Morning Debrief. It's Friday the 19th of August, it's just on 7:30. No pain, no gain. Okay, another slump in the US equity prices, US equities, also in Europe. It all started when we saw US officials question the cash flows of, or the cash reserves of some of the European banks. As a result of that, people started to get nervous again. And in this type of market, that's all you need to see things unfold. And so we saw the start of the sell-off in Europe, extended itself into America, and on the back of that we also had some negative job claims data, some poor manufacturing data, but we had the CPI number that was a little bit higher than expected. So certainly going to present a challenge to the Fed. No growth, slow growth, the chance of a double dip, and you've got inflation peaking. Yeah, that's going to be a tough one, but we'll have to see what transpires. Also, there's obviously a little bit of dissension in the ranks, particularly in the Fed, in terms of how their policy is, what's meant to be happening, and a lot of people thinking that, you know, there could be another stimulus package. We firmly believe they haven't got the tools to have another stimulus package. So if they don't have that, then I think we're in for a little bit more pain. As we mentioned in the weekly bulletin, we can still expect some more pain in this. In fact, we did mention that the Dow could probably continue to head a little bit lower. I like to think the volatility is with us, but hopefully the market will start to realise that there is some good value somewhere. At the moment, we do see a lot of people putting on the recession trades. That's certainly getting out of commodities, and a lot of people actually moving to safe haven of bonds and gold. Gold reached a new high last night. It is interesting to note that even with gold reaching new highs, some of the numbers, particularly over the last quarter, for the consumption of gold and purchase of gold, very negative. So I think this is the market is particularly running on the back of not fundamentals, but running on the back of some large players covering their concerns. Okay, excuse me. Let's have a bit of a recap, overview of the market just to see where we're at. And that's coming up right now. There you go, the Dow down 419 points, 3.68%, the S&P's down 4.46%, the Nasdaq's down 5.22% over to Europe, very, very bad. The top 50 was down 5.3%, FTSE was down 4.49%. Now the banks were the ones that got hit the most. Some banks were down upwards of 10%. The CAC was down 5.4% and the DAX was down 5.82%. So very, very negative in terms of that. Looking at the local market on the futures, down 103 points, 4,116. Look, although we still think there is value here, particularly in Australia, we all do, we can't get complacent over this because, as we noted in the consumer confidence numbers, that there's always a bit of a concern there in Australia. But we will get hit, obviously, as you can see. The extent of where it will hit, let's have a look at a few charts and see what happens there. Okay, let's just now look. There's the Dow. There's the peel away we had last night. As you can see there, look, it might find a little bit of a low. You'll find the market will get aggressive about selling it through 10,900. 10,500 is the next stop there. Looking a bit close to home on the SPY, just technically down 103 points as we're aware, and that's at 414. Look, that can still come, but I just want people to keep in mind that these are the lows we've seen. I've put those hourly charts on there because I think if it does get down to these levels, then as long as this little baby holds here, 3,700 level, then we've got to assume that we're still in a range and should not panic too much. So let's see how that unfolds today. Okay, now one of the big things, obviously there's been a flight to US Treasuries with the yield posting probably its lowest yield for a very long time. As a result of that, we've seen a little bit of strengthening in the US dollar 74.31, but as you can see throughout this whole area going sideways. If you look at the daily chart for the US dollar, we've all talked about the means and mechanisms of why this US dollar should firm, but it hasn't. But obviously you can see if contagions start to spread, people will go to the Treasuries as a safe haven, and that should obviously increase the demand for the currency. We might see a bit of a spike as a result of that. Okay, Aussie battler on the currencies, just looking at it, 103.72, you'd expect that to happen. Is it an area to buy the currency? Look, it's anyone's guess, but I think you can safely say, once again, going back onto the hourlies, there is the range. And if you even just don't look at what's happening, but you just say, okay, if that's the range, the downside's here, down through that 100 or $1, top side's 110, obviously closer to 1, it's got to be cheaper. So keep an eye on that one. Gold reached a new record high, traded up to 1835, I believe. Haven't confirmed that actual high there, but still right up there. We still feel that it is an issue being at these levels, but you can't move away from it. We've had a couple of goes at thinking that there is a bubble forming, but in the not the absence, in the interest of more news that comes to hand, those variables change. And as those variables change, we've got to react accordingly. That's what's happening in crude. Just by way, second quarter demand for gold was down 17% compared to the same time last year. And a contra to what people expect, the ETF holding has dropped by 82% compared to last year. Most demand coming from India, which is up 38%, and China, which is up 25%. So you can see there people looking even at these levels in those physical areas looking to buy it. What to do on gold, not sure at the moment. It's broken through these new highs here. As a result of that, on the back of what's happening, yes, there are divergences appearing, but when you look at value, it's perhaps not there. This is fear that's running it. Very hard to trade. Okay, that's on that. What else have we got? Crude oil took a big smack, down 7%. That's a whopping move, down $6.28 on the back of this fear. It's overdone, there's no doubt about it. Look, you get opportunities back to the lower end of the range, I'd have a look at it. This is recession trades which people are putting up. Likewise with copper 393, also under pressure. Look at the daily charts here. This low area here is probably the area. We cleared the deck on all trades last night, just because we just felt that those recession trades are going to throw the fundamentals out, and as such, then it's a dangerous market to trade. Market's not looking at fundamentals anymore. It's looking at a bit of fear and people and the weight of money moving into those recession trades. As a result of that, you can see things like wheat under pressure, down to pressure, corn under pressure. So all commodities across the board came under pressure as a result of that. So yeah, not the best. Okay, looks like we've covered most things. Economic calendar tonight. Look, there's not a lot in the States. We've got a little bit in Australia, average weekly earnings. Let's move that. Sorry, that was obviously CPI. But Friday, sorry, in Australia, not a lot, but we've got a couple of the Feds actually doing a bit of chatting. So the market will trade by itself without the sway of information. So really, that's probably about it for this morning. Obviously, a volatile day. I think you've got to think outside the square if you are trading the market. Look at the ranges. Look where we are in the ranges and then sort out what you think is good value. At the moment, as I mentioned, the market is not focusing on fundamentals. It is just focusing on people trying to put on those trades to balance their books. And as a result of that, that's out of equities, out of commodities, and obviously moving to the sideline to dollars. But that's about it from me. I hope everyone has a great day. Good luck tonight. Happy trading, and bye for now.